Last October, there was a really like a drop in interest rates, mortgage interest rates, and we saw a big, a lot of activity. But then when rates went back up last November, and yeah, it feels like showing activity has been soft since then. So that's created a really unique set of challenges in terms of longer days on market, both for our projects as well as the people that we're lending to. A little bit softer values, especially in certain areas of the country. We've seen values soften, you've seen some areas soften by 10, 15%. Many areas softened by 5. And so that kind of longer, there's the lower values have affected refi appraisals. And so folks may be, doing a refi, but sticking some more money in the deal than they expected to.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Investor Fuel podcast. I'm your host, Michelle Kesil, and today I'm joined by someone I've been looking forward to chatting with, Jack BeVier, who's been making serious moves in the investing, property management, and lending space. So glad to have you on the show, Jack. I think our listeners are really going to take something away from how you're approaching all of your investor management and renovations and wholesale and just so many things that you have in your portfolio to dive in and discuss with you. So excited for you to be here.
Yeah, pleasure. Thanks for having me on. I'm really looking forward to it.
So first off, for people who may not be familiar with you and your world, can you give us the short version of what is your main focus these days?
Yeah, sure. So we run really 3 different businesses. We run a real estate business, property management business. Both of those are based in Baltimore, in central Maryland. And we buy maybe 75 to 100 houses a year. And everything is vertically integrated. So acquisitions, construction management, marketing and sales, and property management are all in-house. So we'll buy maybe 7,500 houses a year, renovate those, and either keep them in our rental portfolio or sell them to homeowners. Do a little bit of wholesaling also, but mostly either keeping as rentals or flipping. And we built the rental portfolio up to about 850 properties, and we property manage those for ourselves in-house also. And then we have a lending business, Dominion Financial, that originates fix and flip loans, RTL loans, as well as DSCR loans. So we keep all the RTL loans on balance sheet and service them ourselves. And we have kind of a unique setup on the DSCR side that we're selling to maybe a dozen different loan purchasers. So it's beneficial to borrowers because they kind of they have access to all the different DSCR guidelines. So they know that their scenario is getting matched with the most efficient execution, so the cheapest rate, without having to kind of pay for the broker middleman. So that's been kind of our business model, to keep pricing as tight as possible for, repeat professional real estate investors.
Yeah, absolutely. That is many verticals that you guys have. What has been your key to keeping that running smoothly, holding, just so many different things in your business?
Yeah, it's been that's been a challenge, right? Like we just been growing each business. We've been doing all of them for about 23 years, and just kind of slow organic growth in each of the business models. They've got their different cash flow management challenges. And at different points in time, there have been like more opportunities on the real estate side for flipping. Sometimes it's been a great time to to add rentals. Sometimes the lending has been more or less competitive, and so we've kind of like tried to pivot energy and resources between each of those business models as the market has given us different opportunities.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
But always with like the core focus of, distressed single family real estate investing or distressed residential real estate investing as being like the core skill set. And these are just different ways that we exercise those skills, either on the debt side, on the equity side. That's been it's been fun to try to manage that through, of course, a number of cycles too. So it's been challenging and, ever changing. So I'm sure that the next couple of years, things will look totally different than they do today, because that's always just seems to be the case. In 3 years, the market's totally different and you need to constantly be pivoting.
Yeah, absolutely. That's an important facet of business, is keeping up with the change and the pivots. So I would be curious, do you have like an experience from a pivot that you had to make or something that went sideways that you had to overcome that you can share?
Yeah, sure. I guess I'll go way back to like 2007, 2008 timeframe. We were really an asset-based lender only, and we were making loans in our backyard because we had a real estate platform, and that was like a great recipe for success, right? Like if I'd buy it for 100, I'd happily lend 80 on it. The downturn kind of taught us some harsh lessons, though, about like when the going gets tough, like who stays and fights and works it out versus who tosses you the keys versus who actually actively fights against you. And so we've kind of gravitated to more like professional real estate investors, repeat folks. We've had to get a lot tighter in pricing as a result of that, but that's kind of allowed us to scale and look for the best, kind of most talented real estate investors all across the country. But with a focus on like quality of borrower, experience of borrower, like we're really interested in the nature of people's experience, not just that you've done a flip before, but like, hey, how complicated was that rehab that you did? Was that a patch and paint, or were you moving walls? Or are we popping the top and building a dormer? And like, those are different things. Those are not the same project. Kind of learning, and these are all lessons of like, because we didn't do it that way, we had foreclosures and took properties back and suffered losses. So like, we've tried to like constantly make our risk management more and more intelligent, because ultimately we need for us to be successful as a lender, like we need to have stability, we need to have low loss rates, so that we can have the lowest fix and flip terms to go along with that, which is what our borrowers are looking for. So that's always been a challenge, ever changing challenge. We're constantly tweaking to try to find the right fit of aggression in terms of loan to cost and guidelines to make sure that we think that this is going to be a successful product.
Yeah, absolutely. That is so important. So what are you like most focused on right now when it comes to scaling and growing your business?
Yeah, sure. So it's an interesting time because I think that things have gotten softer over the course of the past 9 months, especially. Like last October, there was a really like a drop in interest rates, mortgage interest rates, and we saw a lot of activity. But then when rates went back up last November, and it feels like showing activity has been soft since then. So that's created a really unique set of challenges in terms of longer days on market, both for our projects as well as the people that we're lending to. A little bit softer values, especially in certain areas of the country. We've seen values soften, you've seen some areas soften by 10, 15%. Many areas softened by 5. And so that kind of longer, those the lower values have affected free refi appraisals. And so folks maybe, doing a refi, but sticking some more money in the deal than they expected to.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And we have those same challenges ourselves, in the projects that we're doing. We have, we're subject to those same dynamics. Managing cash flow and working with our borrowers, to help them manage their cash flow in their business has been, I think, kind of the dominant theme of the past 6 months. And I think it's going to continue too. So I kind of think that's where we're at right now.
Yeah, absolutely. And what are you doing in order to get there? Is there some sort of steps that you can share? Maybe other people are in a similar place as you.
Yeah, I think it's been mostly about avoiding pitfalls, because the DSCR loan has been a phenomenal tool for real estate investors, right? And it didn't exist 6 years ago. Didn't even exist. The rates were much higher than bank rates, and no one was really borrowing DSCR loans to speak of 6 years ago. So it has been a huge benefit to the real estate investor community to have this predictable, close in a couple weeks refinance resource at rates that are competitive with bank rates. So that's been the upside to it. The other side of that coin, though, is that it's allowed people to grow really quickly without the brake pedal that the banks kind of used to provide to the industry, in terms of asking you what your global debt service coverage ratio is, validating that you're actually profitable. The DSCR loan doesn't ask those things, right? Now, that's wonderful because you don't have to go through the proctological of having a bank ask you for your tax returns and pick apart your cash flow statement, which is a humongous pain, and have lived it and hate it. And so I'm super grateful that we don't have to go back to that. But but you could also get yourself in trouble with that, where if you've got a good deal and you've got a FICO, you're good, right? You can get a loan. Well, some folks may have gotten more loans than they should have, and maybe they don't have, and the cash flow fundamentals of their business aren't as strong as they need to be to weather this kind of softer environment. So I think that trying to counsel folks on hey, take a look at your business, step back, make sure that the cash flow model for your business works too, and it's not just about equity building. You also need to manage cash flow. And that's something that is not a lot of folks are, have experience in or are being taught. They're being taught about how to build equity on there's not a whole lot of focus on the unsexy part, which is cash flow management. But I think that's what kills you. So that's been our experience. That's been the hardest part of growing for this long, has been cash flow management. So we're trying to just kind of give some counsel to folks that we're working with about managing cash flow.
Yeah, that's so important. So I know you've been in this industry for a while now, and many of these listeners maybe are newer to investing or earlier in their career. What are some insights, advice, things that you could maybe share for people that are earlier on in their journey?
Yeah, sure. I think the past couple years have been tough from a deal-making perspective. So folks that are getting into it right now, it hasn't been the easiest period of time to find deals that particularly ones that cash flow well. It's just such a low inventory environment that finding a good deal has been really hard. And then the refinance rates have been, right now, I think they're in the high sixes. With us, they're in the high sixes right now. But whether you're in the mid sixes to mid sevens, the cash flow on that is not awesome. There's not a whole lot of 9 cap, deals out there. That's a gem. That's hard to find. So I think that kind of just being patient and sticking to fundamentals And when you're underwriting rental properties, especially, being honest about what the expense ratio really is. I see a lot of like wholesaler pro formas still that have like 25, 30% expense ratios when, hey, my portfolio is 45%, 50% expense ratio.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
So, and then the cap rates, but the cap rates don't look so good, right? You're like, oh, a lot of deals look like, oh, I'm buying this at a 6 cap and I'm borrowing money at 7 to buy an asset that's going to return 6. That's not a good formula for long-term success. So I think, being honest with yourself about expense ratios in your underwriting, but then also sticking to that underwriting is I think prudent advice. On the more optimistic side, I think that because of every in every distressed situation, there is an opportunity that comes out of it. So I am kind of excited for this winter, so to speak, whatever it is, 3 to 12 months from now, where I think we're going to see some additional softness. And then as a result, buying opportunities and better buying opportunities than we've seen in a while from a cash flow perspective. So I think that's kind of the silver lining here is that, for those who can be patient and are patient and stick to their numbers, I think that the market is moving towards the investor that has dry powder and is ready to strike as prices readjust a little bit.
Amazing. Yeah, that is valuable advice. Thank you for sharing that. What would you say is the next big goal for you?
For us, we continue to grow the lending business. We like competing with, the big Wall Street firms that have gotten into the space. We continue to grow our volumes and get better and better on a service side. Like our goal is to be able to lend nationally, but for whoever we're working with to not realize, for them to feel like we're a local lender, that they can pick up the phone and get a human on the phone and talk about the nuance of a deal and get draws, turned around very quickly. And if they have any, servicing question or servicing issue that they can get a human on the phone, frankly, right? And not just have to get told, hey, here's what you have to go do, go on the portal and figure it out yourself. Kind of like portals when you want it at 2 a.m. and you just want to get a quote, but a human when you've actually got a problem that you want to solve and work through, or a situation that you want to talk, bounce an idea off of us. So we're trying to really scale the business without becoming, this just blob of corporate, this blob of corporate, lack of service. And so I think I'm excited. We've been working on AI. We've been really leaned into that since ChatGPT came out, whatever it was, 2.5 years ago. And we think as of last August, the models got to a place where they could actually do really cool stuff. And so we've brought that into our business and are building it internally, which has been a big investment and a huge learning curve for everyone here. But it's enabled us to really start taking a lot of the more automatic data entry, moving data around, analyzing, scrolling through PDFs. We're trying to really get rid of all of that out of our workflow, so that our people can focus on interacting with our customers and providing a great borrower experience. So managing that transition, right? Figuring out how to make the technology work, how to incorporate the technology into our business while the train's going down the tracks, so that we can free up our people to do things that are fundamentally human, and really embrace our humanity. That's the direction that we're pushing. And we've made a lot of strides on it so far. We're going to keep working on that. But I think that that's kind of, our thesis is that's what the future is that the people interacting with people, and that is going to be, and that isn't going away, right? People want to do business with other people, but we also don't need a person anymore to scroll through a PDF and extract a bunch of data from a credit report and a background search and input it into a software to make sure that you fit with guidelines. That stuff's just going to be done automatically. And I think that that'll lead to, or is leading to now, a better borrower experience and also a lower cost of operations, which translates to better rates, right? Because if I can originate loans for cheaper, then we can be more competitive on rates than other folks are, while providing a better, borrower experience. We think that's the winning formula. So that's what we're focused on.
I love that. I think that's so important to foster those relationships and human connection while also like leveraging that technological support that we have. So when it comes to building relationships and growing your network, what has made the biggest difference for you?
Yeah, sure. So like I'm pretty introverted. Like we use Culture Index, or if you look at my Myers-Briggs or whatever, pick your poison. I'm super introverted, so I don't love going to like conferences and going to a cocktail hour and like and working the room. That's like not me. But I do love like one-on-one calls or taking folks to lunch. And I have found that I'm more comfortable in that environment. It enables me to have a deeper conversation, really get to know the person better. And I'd say really like I just made an effort to like get out of my box a long time ago. I was like, hey, I'm going to have to do this. I'm going to have to figure out a way to build a network without being an extrovert. And so I just started like taking people to lunch because I'm super comfortable one-on-one. And just made it a habit. It's just like, hey, every week, 3 lunches, with folks. And now it's become, like Zoom calls and Teams calls, which is, technology's been great. Now I can network with people all over the country. But I try to be diligent about that, to like constantly be meeting people and understanding their business and connecting dots and then introducing them to each other. So, and I've just made it a habit. I've just made it part of like my routine is to set aside time every week to do that. And it's just been a discipline thing for me. So that's been my approach to it, given my personality type.
Yeah, I love that. There's ways for everyone that works.
Yep.
All right. So before we wrap up, if someone wants to reach out, connect, collaborate, or learn more from you, where is the best place for them to reach you?
Yeah, sure. I'm easy to get. My email is jack@thedominiongroup.com. My cell is 410-353-5667. And our lending website is www.dominionfinancialservices.com. So all 3 of those are easy ways to get in touch with me. And I love talking shop, so don't be shy. Look forward to speaking with anybody.
Perfect. Well, listen, I appreciate your time, your story, and perspective. We need more people in this space who are doing things in this right way. So thank you again for being here.
No, my pleasure. I really enjoyed the conversation. Thanks for having me on, Michelle.
Absolutely. And for those of you that are tuning in, if you got value from this, make sure you've subscribed. We have more conversations coming with operators just like Jack, who are building real businesses. And we'll see you all on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.